So how can you better automate your investments? I'm going to be focusing on that today. Now, in a previous video, I went over the auto invest feature by Trading212, which is their investment pies. Now, prior to this video, I started to fund one of the pies. Now, in that previous video, I showed how to create a given pie, but I didn't actually fund. So I'm quickly going to show this process in action. So with low figures at the moment, you can either select by targets or self-balancing. By targets, we'll just split the amount of money to the exact percentages. Self-balancing will supply more funds to underweight companies. But when you do this for the first time, it doesn't actually make a difference whether you select targets or self-balancing. Now you can see I have a list of companies, and that's what I'm going to be focusing on today, which companies I decided to pick for a given pie. But you can see when I placed this order, not all the markets were open. So any markets that are open, the investment will take place. And you can see at the top bar we have a percentage. And once all the markets are open at the respective time zone, your orders will be placed and the order will be completed. Now, automating your investment process simply makes the process much more easier. So with the respective pies, we can see for the ones that I have funded, let's take consumer for instance. So my process right now is that for a given week or a given month, I can fund one or more of the pies. Now, as I said in a previous video, until it's possible to have pies nested, I'm going to be manually funding each of these respective pies. But let's take a look at which companies I have decided to allocate. So on the consumer pie, if I click on holdings, we can see the companies that I've picked and the respective weighting that I've supplied. Now I'm trying as best as possible to add UK-based stocks. Right now it's very difficult as a dividend-based investor because a lot of dividend-based companies have been either suspending or stopping their dividends due to COVID. But we can see with the likes of Morrisons, I've given a slightly higher weighting to the American counterparts. But just going down the list, I have Morrisons, Target, Home Depot, Walgreens, Coca-Cola, Walt Disney, Unilever, Walmart and Tesco. Now, given the conversions are in pounds, we can see some of the blue percentage weightings switch from time to time. Now on top of that, when you create a fractional order, you're never going to get an exact percentage. It's going to be slightly over or slightly under. And that's why our actual portfolio value, which is in blue, is slightly different to what we've set. But as time goes on, the accuracy will get closer and closer to the value you've set. So in the past, there were some companies in this list that I wasn't a holder of. So Target, for instance, was one company I didn't hold. And on top of that, we have Coca-Cola, which again, I didn't hold. So just going back to the list of companies and the older view that we're more accustomed to on our investments, if I scroll down to, let's say, Morrisons, we can see that within my investments, I've got a total share amount, which is 17.7, and we can see 11 were brought manually and then 6.7 are within the pies. So in the future, Trading212 will allow those manual stocks, so in my case 11, to be connected to the pie. It does mean that for people that invested manually, you're going to have an overweighting within your portfolio. But in the future, we can self-correct this. Okay, so just going back to the pie view, and let's take a look at the ETFs. So I haven't funded this pie just yet. We can see I have one ETF, which is the Vanguard FTSE Dividend Tracker, and I've already invested in this stock manually and I'm happy to hold. And so I may add one more ETF, but for now I'm undecided and it's left unfunded. So on to finance. We can see I have a small value, but in terms of the companies, one of the new ones that I've added is Citigroup. When inspecting their financials on Yahoo Finance, they were just in a really solid position, and therefore I gave the highest weighting out of all the other companies. We've got Bank of America, JP Morgan and Wells Fargo, and I gave a slightly higher weighting to Bank of America than the other two, and with Wells Fargo the lowest at 15%. Now for the other UK banking companies such as Lloyds that I've invested manually before, in short, none of those companies have made it to this list. And for UK investors, you'll be aware that there's been a suspension on the dividends due to the pandemic, and we're probably looking at January 2021 before the dividends start paying out again. So finance has an all US company listing, but these are the decisions that I had to make I want to make sure that my dividends are going to be safe in the future. All the companies listed in these pies have to maintain a set criteria, whether it's a sensible payout ratio that's under the 50% and whether their earnings are making profitable values and at least stable year after year. So moving on to healthcare. So I have the highest weighting on GlaxoSmithKline, and that's because for the other two companies, they're US based. And so before I receive those dividends, they are taxed at 15%. With GlaxoSmithKline, sure, I'm paying stamp duty every time I execute an order, but I'm not being subjected to that 15% dividend taxation. But not far behind, we've got Johnson & Johnson and Amgen at 30%. I've invested with Amgen on different platforms, and I've decided to once again invest for the long term on my Trading212 account. Now, Johnson & Johnson is a new company that I've added. Their financials were okay-ish. I was debating whether or not I wanted them added or not. But these are my top 3 for now, and I can always amend in the future depending on any financial news that takes place. And then real estate, we can see I'm currently waiting for some of the UK markets to open. We're funded at 85% right now, but I have Realty Income, which is my highest weighting. I feel as though they're the most stable out of all the REITs that I have in this portfolio. Now with 20% funding, we've got Welltower, new residential investment. Even with their dividend cuts of 90%, I found they've been really sensible, and even last month they've increased their dividends. So I'm pretty happy keeping NRZ within my portfolio with a percentage of 13. So Store Capital, there's a chance their dividends could be cut. I've therefore given slightly lower weighting to the ones above, but I'm spreading out my risk, and I don't see why Store Capital can't be added to my portfolio. Main Street Capital as well, set as 10%. And then we have British Land, which is a UK company. They are not paying dividends. So for me, I feel as though they just wanted to be nice and stop paying dividends, not because they couldn't, but just because it's seemed to be the right action to take. So right now it's just a dividend suspension. I suspect in the near future dividends will start being paid again. So I want to add this to my portfolio. Once dividends do start being paid, I will add a higher percentage and probably reduce some of the weightings from, say, Welltower, just to add an extra 5%. But for now, I have a weighting of 5%. And then Simon Property, one of the more riskier companies out there, but right now they're last in place on my list, and I'm happy to add them to my portfolio. So technology, so we've got Microsoft, Apple, AT&T, Verizon. Those are 2 telecom companies, but for me, I see them as tech-based companies, and then Intel as well. So all of these are at a 20% weighting. These are all companies that I've held in the past. So we'll move on to the last one. So utilities, we have all US-based companies. Now, I really wanted to add National Grid, which is a UK-based company, but their stats were just not looking great. Their payout ratio, I think it was around 120 to 130%, and that's just way too high. And so I've opted for all US-based companies. We've got Southern, Duke Energy, and NextEra Energy. So all of these financials were okay. Payout ratios were in the 70%, but that was pretty standard for the utilities sector. Okay, so for all these pies that are funded, you can see I actually have auto invest turned off, and that's because I'm manually allocating the funds within the respective pie. But we can see that under the dividend income, I have auto reinvest on, and so when dividends are paid out, those dividends will automatically be reinvested into the pies. So that is an update on the new companies that I've added and the structure within the pies. Just before I wrap up, I just want to go over the companies that haven't made it to the pies, and they are future companies that I may remove completely from my portfolio. But just scrolling down, we can see Dwent London has not made it to the list. The main reason there was because dividends are not being paid out, at least for now, and so they simply didn't make it to the list. Scrolling further down, we can see Land Securities as well. Same reason as previous company, dividends are not being paid out. Now, I mentioned in the past that Lloyd's has stopped paying dividends in the past, so I was aware that such a company would cut their dividends. But given that it's not until 2021 that dividends are going to be paid out again, and combined with the fact that I have close to 1,300 shares, it didn't make sense to continually invest. And so we shall see in the future if I plan on selling, but for now, I'm going to leave as is. And then, as I mentioned earlier, National Grid hasn't made it. In terms of the underlying stock, it's performing fine. You know, if I had more than one share, everything would be doing doing pretty well, but their financials just didn't add up, and that was the reason why I didn't add them. And so for all the remaining companies, they've all been added to the pies, so there's only a handful of companies that I may sell out in the future. So what are your thoughts on the Trading 212 pie functionality? Will you be adding this to your portfolio, or is it something that you're going to be given a miss? So let me know in the comment section below. And so hopefully this update on my account portfolio has been useful, and with that said, I'll catch you in the next one.